Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. As always, we come to you at the appointed time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have happening today? Well, certainly we've been kind of oscillating around minus 20 to minus 40 on the S&P most of the day. I've seen, what have we seen, 4 or 5 rally attempts that just all fizzle. They really don't blow up down at the bottom, and you're not really getting lower lows so much as just there's no appetite once you get up, I don't know, about to what, 37.70? It's about it. Everybody just kind of quiets down, and it just kind of like a souffle in a 70s TV sitcom. Someone slams the door, and it just all the air goes back out. So it is a day after the Fed. And it was very interesting to watch the close, but I had several people ask me what I thought was going to happen. I thought the best we're going to do is just slightly higher. I didn't think that we'd really blow out to the downside till today. But, of course, we sold off, broke through what was support at 38.50-ish, 38.40-ish. We're doing the same kind of thing, which is just backtracking, just barely keeping above water. Any break of 37.50 and a lower close into the market today would suggest that we are going to go down to 36.50. And there are a few things going on that makes me think that the next week may be one of the toughest weeks. One, we're starting to look at a government shutdown, and that would be a week from tomorrow. Also, probably mid next week, we had a storm in the Gulf that could be shutting down oil wells if it continues on its track. Looks like it's probably the first one that would possibly get back in there and really cause some issues. At the same time, we've sold about 80% of the strategic petroleum reserve that we could actually sell without collapsing the mines. So there's a lot of stuff that kind of reminds me of that book, The Perfect Storm, with all 3 storms hit each other. Today, the 10-year was at 12-year highs. And as far as I can tell, when we look at the charts, we've been looking for the TLT as a benchmark, a guiding light, a northern star, if you will, to get back to 101, because that's the next support level. And kind of the big gap here tells us just that. We gap down, volume's going to be good today, and then you just start looking at much longer time frames to go back. But the last major low under here is just a few dollars away. That's the November 2nd, 2018 low at 176 cents. That ate 18 million shares. We got 20 million shares already today on the TLT. So, yeah. Does that hold? I don't know. But again, I kind of looked at the way that the market is acting today as it did act on Tuesday, which it was just sitting around, kind of floating around the support level. It reminds me of a 6-year-old's tooth, that it's just kind of flopping around. It doesn't really come out, but eventually, yeah, it does come out. But it's just kind of hanging on. I guess that's why they say it's hanging on like a loose tooth. But certainly that's it. And, of course, bonds are going to lead the market. They are, at any time you ever look, bonds as a dollar amount are 10 times what the equity market is. So we have that. But 10-year, 12-year highs pretty much tells you everything you need to know. And I don't know if there's anything else you could actually do about it. Anyway, as I said, keep an eye on the storm in the Gulf. We've got a couple other things, and I'm not really sure how I handicap them because it's not always easy to get the truth about what's going on. But a lot of people are starting to whisper. It's starting to become a murmur, almost a rhubarb, that the port strike isn't a done deal. And again, that's one of those things you just have to look at and go, okay, is this going to be a perfect storm? We're going to get one of these things and the other ones go away. But it's very tough, at least from what I'm reading from the inside the Washington, D.C. thing about getting the bill that Senator Manchin sold his soul for the other bill to get attached to this bill, which no one wants. The Republicans don't want it, and the Democrats don't want it, and they're going to attach it to the spending bill. So I have a feeling that both the Republicans that are mad at him and the Democrats that are mad at him are going to be pretty much leaving him up on the lurch on that deal. And everybody will be able to point fingers somewhere else. But that does mean that probably you're going to have that vote fail. So markets, they've tended to look past these spending bill brinksmanship deals. But, we got somebody on the line here. We've got Steve in Austin. How you doing, Steve? Are you there? Is he gone?
Okay, thank you.
Are you there now?
Yes, I am.
Okay,
how are you?
Steve. We've only got about 30 seconds.
Dave, I was going to ask you about CCJ. There's gaps down there, and I didn't know if you thought we'd go down and fill those gaps or not.
I'm not a big fan of thinking that. My thought is that we're probably getting fairly close to an overall low in energy. This is just pulling back to this huge up day. That
it's
up day with a sign of strength is back on the 29th.
Compared to what it went up on.
What's that?
It's coming down on lighter volume than it went up on.
Right. We're into this bar of the 29th of August that had almost 17 million shares, got about 2.7. So, yeah, it's looking good. Want to hang on through the break?
Sure.
Okay, we'll be back in a minute with Steve from Austin. Steve Austin.
Of looming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve in a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
As we come back, we're with $6 million man himself, Steve, from Austin, Texas, talking about CCJ. They are a Canadian uranium company. And I don't know what else. Yeah, it looks good. You got a light volume. My thoughts are, go ahead.
Yeah, what I was thinking, Dave, is the only thing that concerns me, because I did get a little bit of it in here today, and I thought, those gaps down there bother me a little bit, but seeing how the industry it's in, I'm looking a longer term on this thing, because I think with the government that we have and this ESG stuff that we have now, the environmental, social governance, it's an approved energy for this government that we have right now. And so I think that they're going to open up paths for a little more nuclear power plants to be built, which we haven't had in decades. Yeah. Is this your thinking on that as well?
No, I think the rest of the world's going to do it.
Well, that's okay.
We're going to be a NIMBY, not in my backyard. Nothing. Okay. I think energy is going to go up, but I haven't seen any sign that the current administration's anything other than a NIMBY. So, I'm thinking that it's the rest of the countries. We've got 17 nuclear reactors in Japan that are going to fire back up here soon. We've got a bunch of them in France that were mothballed, and Germany that were mothballed, going to fire back up. So there's a lot. Plus, China's been turning them on. For a while, they were there doing one a month. Yeah. So the business in the rest of the world is good. I like that Cameco's in Canada, so it won't have the same kind of problems if we start getting in tit for tat for selling the uranium to people like maybe China.
Yeah.
So
even the insane
I think
one
it's
that runs
the best.
California has approved that now. nuclear power is he's approving it now.
Yeah, I don't know if he's approving it. They're just not closing the last power plant that they had. I think that's as good as it gets. But it takes 10, 12 years to get one done.
Right.
And the old saying is, your ship's not coming in if you didn't send one out, and they haven't sent one out. So figure 10 to 12 years before any of that happens. Now,
but the rest of the world's going to do it, though.
Yeah, in other countries, they don't have a bunch of protesters showing up and saying, "Hey, we don't like this." You just get run over by the steamroller if you do that in China. So yeah, I'm not expecting a whole lot here in the United States. Expecting a great deal more in the rest of the world. So yeah, I think that's it. I think you should look at any of the above in energy that have the ability to produce energy now as kind of the last stand of energy in the United States. I mean, they're not
now,
going to let anybody get permitted.
I would have is, where would I be wrong in this if it doesn't work out? If things don't work out for Cameco.
If you can get through to 25, both of those huge bars, right? I mean,
yes.
Right here, if it goes any lower, really below 26, and it didn't do it very fast, you could get out and try to get back in at 24.
Okay. That's what I was thinking, too, is, okay, I'm in at, I think, a pretty good price here, but I always want to look at the downside, too. Okay, what if I'm wrong? So,
but yeah, the biggest problem right now is people are selling everything, right?
Yeah, exactly.
Normally, you try to sell what you can, not what you can't. And unfortunately, most of the people on Wall Street, instead of selling their losers, they sell their winners or the best stuff because that's what they can sell. That's what other people will buy. They try to start selling something that's in the toilet already, it makes it 10 times as worse, right? So right now,
I like the volume on the upside on this thing, and it's been acting really well. And this is the first time we've seen some weakness in it, but it's on light volume. So that's kind of what you've always talked about too. That this is kind of where you'd want to.
Here's the thing. I would wait till Friday at the close. I was talking to somebody about this. Your odds are much better either going short or going long Wednesday afternoon or Friday afternoon.
Gotcha.
So in a market that you don't have a lot of wind at your back, in fact, the wind's in your face, you want to get every little bit that you can out of it. But, I'm thinking that the whole energy sector. Now, this does tend to trade with energy, too.
Mm-hmm.
Not all the time, but overall, it pretty does. But, yeah, this is one of the best-looking Wyckoff patterns in a long time. I just would wait till tomorrow to make a decision.
Oh, that's great.
Markets crash at lows. They don't crash at highs.
Yes.
And like I said, the market is acting just like it did 100 points higher. And that is, I've had Tim Ord on before, and he kind of talked about it when I was learning to trade. But it's very true, and that is, if you just hang around at lows, eventually you're going to blow through the low. And if you hang around at highs, generally you just blow through the high. Now, there are accumulation and distribution versions of that. But if you're hanging around at lows and you've got decent volume, probably going to blow through the low. And if you're hanging around at highs with decent volume, you're probably going to blow out the high. And we've got enough volume. There's nothing written in stone here. This is one of the harder markets. We had a lot of comments in the Tiger's Den today about that, because there aren't any burning bushes out here right now telling everybody, yeah, we're going to fail. It's all kind of in the last 30 minutes of the day, maybe the last hour. Doesn't look good here. But, the question is, you're going to get somebody to start buying stocks to go into a weekend? Probably not. That's a pretty tough bill. So, if you don't think it's going to go up in the next trading day, always wait for the close on Friday.
Okay. But from a fundamental standpoint, you're okay with this company then?
Everything looks good.
Okay.
They have a fairly well-known business model, and they do some level of enrichment. And if you know anything about uranium, it's logarithmic. So to get from 8% to 20% is about the same amount of time that it takes to get from 20% to 80% make a bomb. So the tough part is getting it to where you can actually put it in a reactor, and they've already done it. Thanks for the call. We'll be back in a minute.
They have grounds all over the place, or mines all over the world too.
Yeah, good company. We'll be back in a minute.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
As we come back in, had a good question in the den, and that was why do the action in bonds tend to lag a little bit? And that's because you sell and then you move the money somewhere else. And generally by the time it's done, you get about a 3-day move. At least that's if you're selling. Now, same thing. There's always money moving either from the bond market into the equity markets into the bonds. But generally when the money's in one way or the other, you're getting a lag between the two. And that's just the time it takes to get the cash out, move it over somewhere else and buy something else. But, you can move into other things like commodities too. But generally in the bond market, it's 10 times bigger than the equity market. And that means you've got a lot of cash and you got to find a lot of buyers, and that does not happen in a single day. So generally, that's why if someone's doing something in the bond market, the lag out there is a while before they're done either buying or selling. So it's just a bigger market. It's like a small cap stock. It can double in a day. How many times will Amazon double in a day? Probably not. So it's just a size issue and the size of the ocean that you're playing in, at least in my opinion. 877-927-6648. You can be like Steve Austin and give me a call. Other things going on, just very weak. Had a good couple of emails here about what I think. I think we are probably looking at selling off or at least staying this low into Friday's close. I can't see any reason that anybody's going to start getting froggy before Friday's close. Maybe you get a little bounce out of it then. But, we are doing, and the market's acting the exact same way it did before the Fed, which is it's just hanging around at whatever support level it's gone to. And we're just kind of grinding slowly through it. My guess is we're going to grind through that tomorrow and be at 36.50, more than likely, or at least touch it tomorrow. And that would be great because that would get us into a longer term low if it does happen. And we'd get the opportunity to see whether or not we're going to test it on lighter volume. Right now, we would. We're only doing about 7.3 billion shares on the CBOE consolidated volume, and that actually would look fairly decent. Other questions out there. Wanted to go into something other. It's been a while. Gartley patterns don't always show themselves in equities to the extent that they tend to be more prevalent in commodities. But let's see what we have out here. Take a look at this. We've got Drive Shack. Again, these are some penny stocks. From looking at the difference in dollars and shares, it is really people are throwing the baby out with the bathwater on these penny stocks. If we do get some kind of low, it's kind of getting to the end of September. Everything's going to probably be washed out. Doesn't mean we're going to get it tomorrow, but maybe through next week, maybe none of those things that we talked about before that could be a perfect storm hit, and you make some kind of low and get some kind of nice pop. But we're starting to get some actual Gartley patterns in some of these cheaper stocks. Maybe since not everybody's looking at the charts, I'll bring it up. Drive Shack, we did say that, right? And then HCTI, Healthcare Triangle, another penny stock. IDEX, IDEX, another penny stock out here. Don't see a lot of big stocks with this, but some of these do look like they could be some bouncers if we do find some bottom. I'm not buying them today, as I said, but if we start getting through the end of September and everybody's still alive, what was that song? In the year 2222, if we're still alive. Well, that was like a 60s song. That was horrible. Anyway, 22nd Century Group, XXII, apparently. Kind of nice. Now, this one's $1. Maybe that's too expensive for us here. But it is kind of interesting when you don't really get many Gartley patterns. We're starting to see a bunch start to develop in the penny stocks. So we'll keep an eye on it. This last one's Zenvia. Again, if you're looking for some kind of lottery ticket, I'm not going whole hog long on anything. But generally you see these penny stocks get to the point where they don't look bad, and you have to start saying, okay, these things aren't going down anymore. Maybe we've got an opportunity for a pop. But again, we've got a lot of stuff that we have to get through. We've got through the Fed. We're just kind of meandering around right on support as we did before. So maybe it's today or maybe tomorrow, but it really looks to me like we're going to try 3650-ish down there, which is nice. If we go back and look, let's go back here, look at the S&P on a longer term basis. Do this. Too long. Right, hang on a second. There we go. We got this 86.87 low. That's the June 17th low. And let's see. You got some decent volume. Probably going to be close to that volume. We're not into those candles quite yet, but only a little bit away. But yeah, that would be nice. The energy on the way down is maybe 10% lighter. This isn't the incredibly light retest of the low, but it may be light enough to find support down there. And I never liked this low out here. It never got retested. And we've been talking about it for a while. I know our friend from the east side of Tampa, who emails me a lot, called in one day and wanted to talk about buying for the IRA. And I said, hey, if you're really trying to get into the long term, I just sit on the shoulder. This is probably where your decision's going to be made if you wanted to go long term on some IRAs and thinking a potential bottom might be in. As they like to say, a low is not a low unless it's been retested. And we're probably going to be able to get that low retested. Also, Federal Express after the bell, of course, they've pre-announced. A lot of people are saying, well, it could even be worse than their pre-announcement. That's kind of a hard pill to swallow. But, you know, stranger things have happened. But a lot of people are going to be looking at the margins on it along as Costco. I think they already know kind of the bad side of both of these. They're just going to find out how bad is bad. We'll be back in a minute. We'll look through some other stocks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
As we come back, Ronald wants to take a look at Disney. It's been coming back on fairly light volume after it made a high. The downside to this, I think, is everybody knows what the theme park business looks like. The other thing is what the streaming business looks like. And I think it came out either last night or the night before. But the streaming minutes, and Disney doesn't have anything in the top 10. Right now, everything kind of stinks, and there's already some smell on the big projects that they have that are coming out. The next Star Wars one is already being panned. There's some other stuff going on. So I don't know if it's more perception than reality, or whether or not they're starting to see some people cancel their subscriptions to it. It's kind of hard to believe that it really matters that much, but I guess it's more about the trajectory higher. But they, as far as HBO and Netflix and Amazon, this seems right now, when you look at everything in the top 20 for streaming minutes, Disney is at the very bottom of all of them. And that may be a bigger consideration. Yeah, on a chart basis, this thing actually is coming back on fairly light volume. And like I said, I don't think you can, the park business is going to be as good as it can be. There's going to be people showing up. No one's going away. They had to miss a couple of years for the pandemic. They're going. In fact, I saw something this morning about the bookings finally turning around in the cruise ship business. And they had the biggest day ever on Monday of people booking stuff for the fall. I'm still not going to be put on the SS Petri dish. At least I'm not. But, down on lighter volume. Yesterday you had some strong volume. But another business out here that you really need, these tend to really start rallying about 1st of December when the weather gets cold and everybody starts thinking about them. And then you start paying up a little bit more. But, I think maybe just a little early on that. Question about the XLE. Booking higher than pre-pandemic at CCL, yeah. FDX already did release 340, but there's something about margins that they're going to release. I saw that article. We're talking about Federal Express. There's something about margins tonight. Maybe it's fuel prices or something else that they're talking about. I caught it earlier this morning, but it was only one eye open. But again, a lot of the narratives tend to continue on, so you don't know if you can believe those. Anyway, in the XLE, the biggest problem I have right now with the energy is that you're just making, for the most part, lower highs and higher lows. And you really just went sideways here for 10, 15 days. But again, I think we're going to have a lot of stuff happening next week. And a lot of times it's something you haven't even thought of. But there's enough problems in the hopper that we'll have to dodge a few bullets next week. But, a lot of times those surprises do get everybody washed out. As we said when I came back Monday, one of the first times we saw huge selling by the retail investor was on Friday. Everybody was willing to sit on their hands, but we have started to see a dark pool money that's starting to get swamped by retail money. That was the first day that it actually started to happen. And of course, normally you get the retail trader to throw in his shares at the worst possible time. They have the greatest ability to sell at lows and buy at highs. So, we've got a first sign. We don't have enough out here. If we already had some wonderful signals, I'd start looking elsewhere. But my thought is maybe tomorrow, later in the day, maybe Monday, we'll see some signals that could possibly get us some lows. You never know. Maybe a lot of this stuff gets settled out and handled and out of the way before we have to go into them a week from today. And maybe that's the impotence that gets us some kind of low. In any case, I'm still looking at that 3650, a little 3640 level in the S&P to get tested. You get down to those levels and you start getting it's like a magnet. It's not ultra strong, but if everything being equal, it's enough to drag it down there. So we'd have it. Okay, question about the SMHs. You're getting ready to test this. I like the volume so far today. We'll have to see what it comes in like. You got another $5 lower to test the July 5th low. That's 189.94. And we're so close to it. And volume tends to come in late on this. Maybe it'll be good. Energy is about the same on the way up as on the way down in the SMHs. So you've got that 189.94. You're probably going to go out and test that. And again, that would be great to test it on lighter volume on Friday if you're feeling bullish. But I wouldn't be standing in front of that particular steamroller trying to pick up dollar bills today. Okay. We've talked about the TLT already, I think. Lucy. Okay. Question about Microsoft. Microsoft's Dog and Pony, a new product show, is on October 12th. You may want to look at that. This one is testing its lows on a lighter volume. Energy was about the same on the way up as on the way down, or I'd be all over this. But certainly you wanted to see the June 14th low tested. That had 46 million shares. So on that basis, you had $241. Yesterday, you went into that with 28 million shares. Looking pretty good. Today, so far, 19 million shares. What you want is a close above 241.51. And that would say at least you're going to have probably some kind of minor low and maybe a U bottom on this. I would have liked it if it came down on a lot more if it came down on lighter volume, but you certainly have lighter volume on those lows. Now, if you don't get a bounce out of this in 2 or 3 days and it stays above 241.51, we're going to get into that pattern we talked about where it just hangs out at the lows and eventually blows through them or chews through them. Again, not horribly bearish, still probably the best tech stock out there. But, if you're in a bad neighborhood, house isn't going to sell like it's in a good neighborhood. Be back in a
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And see, it says from Rob, hi Dave, do you know any way to gauge how high the yields on the 1 year, 6 month T-bills may go? I've been buying both. Just wonder if they may go higher for longer than anybody suspects or expects. I'm not a big bond guy. I'll tell you that. I don't trade Forex and I don't trade bonds. I would suspect, though, that the one thing you do know about bonds is that the path that they're on tends to be a fairly long path. They tend to actually have a fairly decent run, both up and down, that you can hang on for a while. And just from me watching, it just seems like they run a lot longer than any equity or any commodity out there. So you just kind of have to sit on your hands. But once you're in the trend, you really want to sit on your hands on those. So I don't see any reason to it's one of those things where maybe you want to look at it every week instead of every day. I think that there's some things that are like that. Bonds are one of them. You can get too wrapped up in the day-to-day, and looking at a week and longer-term charts on bonds, even on those shorter terms, probably not a bad thing to do. As we get to the end of the show, as we said, Volume's not blowout, but again, it's not weak. You're not getting a lot of great signals. What we have seen is this market kind of hang out at lows for a while and then eventually break through. So it's been kind of late in the day like it was yesterday. I suspect that we are going to break these lows and probably in the next trading day. So we'll see. Maybe they hold, but I think the volume's probably going to be just a hair too much. So when you can, not when you have to, we will return like a bad rash.
Building wealth trading in the stock market seems impossible